So in question number 1, we are asked to determine whether it's a debit, to record, to increase or decrease an asset account does not depend on the element. Is that true or false? It is false. We actually consider the elements that we want to debit or credit using pairs. So pairs simply stipulates as follows. On the debit side and on the credit side. So these are elements. So what do we debit? Purchases. What do we debit? Expenses. Assets are all debited. Revenues or capital, we credit to increase it. Liabilities or sales, we credit to increase them. So the question is, in determining what to debit or what to credit, or an increase or decrease, do we consider an element? Yes, we consider the element. So this one saying does not consider an element, that's why it's false. Question number 2. How much is the insurance prepaid as at December 2020? If we paid insurance on 1st January 2020 amounting to 60,000 for 9 months until 30th September 2020. So the money doesn't even reach the month end of December. So in fact, we are owing, all right? We have an accrual. So this amount is only ending to September. So do we have a prepayment? No, there's no prepayment. There's no prepayment at all. The prepayment is money that you pay in advance. So the element of the financial statements which show obligation of the entity to transfer an economic resource of past events is called what? A liability. The element which gives us an obligation to transfer economic resource, which is money, of an event that we did not pay for is a liability. In short, a liability is simply what we owe. So to increase capital, we debit it. Is it true or false? Remember, on pairs, capital is on the revenues. To increase capital, we credit it. All right. So here they're asking us to increase capital. We debit it. No, this is false. We actually credit it. A partnership can be what? Written or unwritten. We've mentioned this in the previous class. Yes, it's true. Can be oral and can also be a written document. All right. So what is a profit for the year? Profit is simply the sales minus what? The sales minus what? The cost of sales. Then we less what? We less expenses. So we have our sales. Then when we subtract the cost of sales, what we get here is called the gross profit. So we have our gross profit of 10,000. Then when we subtract from 10,000, 3,500, we are going to get 6,500. These are the items that are just there to confuse you. They're not any part of the transaction. So our answer is 6,500. The company made a purchase on credit from Somato Limited, 160,000. Okay, so we are looking at a ledger account. So which account has to be debited? So we know pairs, we always debit what? Purchases. So we have two accounts, purchases account and Somato Limited. Somato Limited is a creditor. So to increase creditors, we credit it. But which account are we going to debit? The purchases account. So we have B. The motor vehicle costing 100,000 has depreciated over the 10 years using a straight line method. Okay, so the cost is 100,000, and using a straight line method, what is the annual depreciation? So straight line method is simply equal to the cost minus what? The residue value divided by the time. So our cost here is what? 100,000. 100,000. So if you are not given the residue value, we're assuming it is 0, and the time period is 10. So 100,000 minus 0 is still 100,000. Divided by 10, we get 10,000. Are we following?
Yes.
Right. So a customer who sold goods on credit and returned them, these goods were worth 100,000. So the correct accounting entity to record the returned goods is to do what? So we are looking at the entries that need to be considered. So a customer sold goods, but returned them because they're either damaged. So using perils, remember, our sales are always what? Credited to increase them. Meaning the sales returns, we debit them to increase them. So sales returns, it's the opposite of the sales. So if the sales are credited, the sales returns will do what? Will debit them. The customer who is our creditor, to reduce them, we're going to increase. So we're interested in our sales returns. What do? We debit the sales returns. This is true. And credit the customer account. Why are we crediting the customer account? Because this customer was a debtor. To increase debtors, we debit them, but to reduce them, we credit them. So it is true. The profit for the year in the comprehensive income statement is to be taken at the so the profit reported in the statement of the comprehensive income is taken to the financial position shown as part of what? It is shown as part of equity. So we usually add the profit to equity on add other income. Are we together so far?
Yes.
Then number 11, an account with a debit entry of 20,000 and a credit entry of 30,000 will have a debit balance of 10,000. Is that true or false? So we're learning how to balance up. So if you have a debit here, you have a credit there. So an account with a debit of 20,000, so here 20,000, and a credit entry of 30,000. 30,000. So we'll have a debit balance. So this is how we balance it up. So which side has limited amount? Here we'll close down this one here. 30, for it to be 30,000 on both sides. So here we're going to have 30, and here we're going to be 30. So we bring this one to the opposite side. We call it a balance brought down. So we're going to have a 10,000 balance brought down, which is on the credit side. So we'll have a debit balance of 10,000. No, it's supposed to be a credit balance of 10,000. So this answer is supposed to be false. Which of the following is not a purpose of accounting? Which one of the following is not a purpose of accounting? To provide information to non-users to enable them make decisions. No, this is already out. To enable the users, yes, users, yes, users, yes, users. It's mainly for users of financial accounting. There are 7, actually 6, to show what the entity owns. These are assets. To show what the entity owes, these are creditors. To show what the entity owns at a particular time, this is a financial statement. To show how the entity performed over a specified period of time, yes, and to see how the entity is financed. So these are the purposes of financial accounting. Accounting equation. Who remembers accounting equation? Assets is equal to what? Capital plus liabilities. You can rewrite this in any other way. So liabilities equals, so if you want to make liability subject, we leave liabilities there. The assets will remain there minus what? The capital. So this is another way you could take it there. So assets plus makes it wrong. So here is false. All right. Then we go to are we following? Any questions so far? So now we go to our next question. What is our next question? On January 2018, the company rented premises this way, 8,000. So the 6 months. The 6 months rent was paid immediately by check. The amount that was credited to the bank was 8,000. That's true. So let's analyze the question. On 6th of January, company rented a shop, okay, for the premises, which they paid 8,000 for that particular month. 6 months rent was paid immediately by check. So the amount was credited to the bank account by 8,000. Is this true? Is this true? On the 6th of January 2018, the company rented a shop. For how much? 8,000 per month. All right, then 6 months rent was paid immediately by check. So this 8,000 is per month. So 6 months rent was paid by check. So the amount was credited to the bank. Yes, we need to credit because the bank is paying out, but it's not paying 8,000. You multiply by 6, which is about 48,000. So it's supposed to credit 48,000. Why? Because this amount that was for 6 months, not the 8,000. So call it a false entry. All right. Then we go to question number 16. The company paid by check a creditor, Somato, 54,000. So the account will be debited. So paid by check. So we look at two transactions. So we have what? Bank account and what? A Somato account. So if we pay by check, which account is paying out? The bank. So here we say Somato. What are we going to do? We're going to credit the bank because it's paying out 54. Then Somato, we're going to debit bank with 54. So which account are we going to debit? Somato account with 54,000. Because Somato is called our what? Our creditor. So we're reducing our Nkongol. So an amount, we are told that amount of 50,000 due from a customer is deemed irrecoverable. So this is correctly written as follows. You debit the account of the customer with 50,000. Then we credit bad debts with 50,000. This is not true. So the person we're deeming irrecoverable is a debtor. All debtors have the what? A debit balance. So to increase debtors, we add. To reduce them, we subtract by putting them on the credit side. So this amount which we wrote off from this data, we're supposed to do what? To credit it. That's how we reduce in accounting. So here, by virtue of us debiting here, it was wrong. So it is false. On 2nd January 155 cash was paid into a business account. Which account is credited? So you need to understand the two accounts that are here. So number one, on January 2018, 155 cash was paid. So there's a cash account and what? A bank account. So this is a contra entry. It's happening within the same business. So we are told that 155 was paid into the bank account. So the bank account was receiving cash of 155. All right. And the cash still is giving out to the bank how much? 155. The duality concept is controlled. It's complete here. So we're going to credit which account? Cash account. So this is the entry there. So where?
Hello?
Yes, please.
Hello?
Yes, yes.
This is question what?
Question 18.
We are at question 18 already.
Yes. Where in the financial position is accumulated depreciation is closed. So we have cost, we have depreciation, we have our net book value just at the top there. So it is netted off from the cost of the related non-current asset. That is where it's found. So we have, if it's buildings, we remove the depreciation, and the difference is called our net book value under the fixed assets, which we also call the non-current assets. Then an account with a debit entry of 120 and a credit entry of 30 will have a debit balance of 90,000. Yes, this is true. So when you put a 90,000 on the credit side, it will come to be 90,000 on the debit side. So this is what we call closing up the accounts. So it is true. Then here we're told that a company paid shop expenses amounting to 12,500 by check. So shop expenses, 12,500. So which two accounts do we have? So in this event, we are told company paid shop expenses 12,000 by check. So which account is credited? So shop is an expense. So we say bank, since we're using a check, 12,500. So we always debit expenses. Then the bank is paying out. So we write rent, how much? 12,500. So which account is credited? The bank account is going to be credited. So here the answer is C. All right. Qualitative characteristic that requires financial statements to be free from material error and bias. Free from material error and biasness is a reliability concept. Variability, it must be audited. Materiality, it must consider material things. Relevance, it must be time-based. The principle which states that only expenses that are incurred in that particular area should be netted from the revenue. This is called the accruals concept or the matching concept. Motor vehicle, 500,000 depreciated over 5 years using the reducing balance method. How much will be there in the second year? All right, so what we do is reducing balance method for 5 years. So this is a procedure. We divide so that will be the amount in the second year using the reducing balance method. So when we divide this one by 5, we're going to get what? 100,000. 100,000, you subtract it from 500,000, you're going to have what? 400,000. 400,000, you divide it by 5 again. The depreciation is what? 80,000. So for the second year, you're going to have depreciation of 80,000. I repeat, the reducing balance is based on the reducing figure. So this is 5 years. The depreciation for year one is 5 into 500,000, you get 100,000. That is year one depreciation that we're going to account. So meaning when you subtract 500, we've removed 100,000. Our net balance is 400,000. Okay. Our net balance is 400,000. So we are remaining with, and we divide this in there. In fact, we divide 4 in there. With the 4 years remaining. 4 into 400,000, we're going to get 100,000. So in this case, last year we only missed one question. I think it should have been this very one. So A is supposed to be the answer. All right. So to increase the liability account, you debit it. Remember, payrolls is very important. So RRLS. To increase purchases, we debit. To increase purchases, we debit. To increase assets, we debit. All right. Then to increase revenues, we do what? We credit. To increase liabilities, we credit. To increase sales, we credit. So here, how do we increase liabilities? By crediting it. Is this true? No, it's false. All right.